We have the Adani Index, which is down 0.6% right now. That's a 100-point cut, almost there.
A dovish hike. That is, they will indicate that they could pause for some time.
I think you will still need some degree of realignment that will need to take place in the US market.
Quiet opening, bit of a downtick actually, down about 40 odd points.
Over the last 18 months or so, we have been pretty much, moving horizontal.
If I look at what is priced in through the swap market, it tells us that there's a 50% chance of 25 basis points hike.
Policy repo rate unchanged at 6.5%.
What is more surprising is the growth forecast upgrade to 6.5.
Now, no hike is obviously dovish, but the governor made up for that dovishness with lots of hawkish leaning comments.
Of course, it's going to be extended pause because the central bank, I don't think, take decisions that, you will pause in one policy and just the next policy you're going to increase it.
Given the confluence of factors which prevail as of today, we have taken this policy decision.
We are seeing market surge. The Nifty is up 57 points as we speak. The Bank Nifty is up 131.
Well, you're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studios, and this is the last hour of trading this week. I'm Prashant, with me, my colleagues Mangalam and Nigel. Guys, hi, morning.
Hi, afternoon.
Good afternoon.
You're already in the weekend mood. But what a day it's been. You had no expectations of a pause. Pause happened. Thereafter, we saw this big move in the markets, and then now, after that big move, we're running into a wee bit of resistance ahead of the long weekend, perhaps.
And it's a pause, not a pivot.
It's a pause.
That's what he said. I love the way he put it, right? He's going to, in cricketing parlance, he's going to look at it ball on ball from here on, and then take action, whether or not it needs to be hit out of the park.
Pause, pivot. Let me throw in more wordplay.
Yes, go for it.
Food for thought, pause for thought. Right? I think there is a fair bit of not confusion but debate about what this really means, because the market is off the high. Let me just quickly address what the market is doing. It's absolutely flat now. The intraday high stood at about 17,639. And it's spent, if you look at the Nifty through the course of the day, majority of the time has been spent around that 17,615 levels. What is that? That is nothing but the 38% retracement of the entire fall from the all-time high of 18,887 to the recent lows a few weeks ago. So just briefly, from I think between 12:50 and 1:30, that those 40 minutes, the market saw a throw over above this level, made that intraday high, and we are back under this level once again. So I think the level very naturally to take out and to close above next is this one, 17,615. Now the RBI surprised with what was a hold, but a hawkish hold. Commentary and all of that, as we've been discussing, was the job is not yet done. This is not a pivot. This is a pause. It's just for this meeting, etc., etc., etc. So many are asking, what does this really mean then? If it is a sort of pause, how long could the pause last for? We heard from people like Ajay Srivastav earlier who said that, well, it's not that they're going to pause and then the next meeting they're going to sort of turn around and hike again. That's one point of view. The other says, well, we should take the governor on his, in terms of what he said, and it is just a pause for this particular meeting. And I think the market is kind of trying to calibrate all of this, and I think it'll continue to do that. Tomorrow, of course, we've got a market holiday, but global markets continue to trade. And I think the big one is going to be the US jobs data tomorrow evening, which I think will either be in line with the weak set of data the US has been throwing our way, which is good. If the US jobs number, which is the most important data point that the Fed watches, comes in very hot, I think that opens up an entirely new debate for the market and for policymakers, both in the US, here in India as well. So I think interesting lineup over the next couple of days, even though today is the last day for us in terms of trading this week. Guys.
Well, we'll have a weekly expiry as well, right?
Yeah.
That will play out. So that's going to be quite interesting. We have a bit of a range on the upside. The intraday high was around 17,640 odd. So that's going to be a bit of a resistance zone. And you look at the options. Let's pull up both the two strikes up for you on the screen. 17,600 call as well as the 17,550 put. Well, both of them are seeing some bit of writing out there. Maybe at around the 17,600 odd mark, you're seeing some bit of buying as well. But the intraday high, 17,640, positioning as such that holds out. Let's see whether or not that does. And on the downside, 17,525 odd, that should be the level you're looking at on the downside. But let's see, Mangalam, how things go from here.
Yes, let's see how things go from here, from the frontline end of things, Nigel. But I'm looking at the mid-cap end of things, and out there, portfolios are looking very happy today. Not just today, over the last few trading sessions itself. The mid-cap index is up almost 1.5%, whereas the Nifty is up just 1%. The small cap index has even outperformed the mid-cap index out there, as well as the frontline indices. The Nifty mid-cap index was an underperformer in yesterday's trading session, and that, like we pointed out yesterday as well, would perhaps be on account of the weekly options expiry of that index, so maybe some management out there. Today, even as the frontline indices are mildly off highs, we have the mid-cap index at the high point of trade, 2 stocks advancing for 1 declining, and beneath the large mid-cap names that everyone talks about, look at the way a lot of these stocks are moving. I don't remember the last time I saw something like a Barbecue Nation move 14% higher, Tasty Bite Eatables up 8%. We have, and these are stocks with decent volumes. Borosil up around 7%, Sheila Foam, and then you talk about all the big rate sensitives which are doing well, be it the NBFCs, be it the real estate pack. All of them doing extremely well. So portfolios would be happier, looking forward more to the long weekend than the frontline indices.
Just making one point, Mangalam, April historically has been a good month for the broader markets. And whether it's on the downside or the upside, in the month of April for the last 10 years or so, the small cap, mid cap index has outperformed what the Nifty does. And at least in the first week, it's appearing to be no different, because the small cap index is up close to 2.2%. The Nifty is up close to 1.4%. We're talking about month to date. So let's hope that trend continues, because portfolios, some of them have really got clobbered. Hopefully a bit of a bounce back.
Hopefully that continues. And the other thing I'll also be watching out for next week is, when the earnings season starts, etc., mid-cap IT. That's been one of the packs that have been doing well over the last few trading sessions too. So whether that continues to do well or not. But all of that in just a bit. First, let's tell you what's lined up on the show today. Real estate stocks, they surge higher post RBI's surprise move to keep the repo rate unchanged at 6.5%, bringing in some relief for home buyers. We'll analyze the impact of this development on real estate players. Indian Energy Exchange is the biggest F&O gainer of the day, and this after the company announced its March total volumes grew by 12% sequentially. Details coming up later on the show on that one as well. Dabur's weak fourth quarter update hits the stock down almost 4%. The company said they expect the operating margins to be lower by almost 200 to 250 basis points. And as usual, we'll also get you the alpha manager of the day. Jitendra Gohil of Credit Suisse Wealth Management joins in for a chat on the markets, his top portfolio of bets. All this and more in the next 60 minutes.
Okay, well, that's the lineup. How should you position yourself in the last hour of trade? And we have Jay Bala joining us to answer that question. It's an important day, so we've invited Jay to give us that view. Jay, you've got the correction all right, almost to the T. How are things looking? And it's an interesting kind of sort of macro market day today as well, with the pause from the RBI. Yields are moving, markets are a bit indecisive. What's the call?
Yeah, from actually short-term perspective, Prashant, the low of today is going to be extremely critical. That's 17,502. If the markets hold above 17,502, this corrective bounce that started from 16,822 can stretch a little bit towards 17,800. But the intraday fall from today's high has signs of exhaustion. If the markets were to make one more intraday low below the low that's just been registered, that itself will make the bull case nervous. But as long as 17,500 is intact, this rally can stretch. But if 17,500 breaks, assume that the corrective rally is done, and also keep an eye on Nasdaq futures. If 12,600 goes when the Indian markets are closed, it's all over for the corrective bounce, and we're going to see a lot of downsides come through.
A lot of downsides come through. By the way, since we have you, Jay, how is the globally as well? We've seen a massive slide in yields, etc. Right? The 2-year, the 10-year. But equities are also have started to come off a little bit in the US.
Right. See, the markets have been spooked by the recent events that's happening across the world for banks. So it's just kind of an oops kind of scenario where we need to hide for cover and go for safety. So that's the reason why the bond prices have rallied and yields have come down. and yields are pretty close to the 10-year US 10-year I'm talking about is somewhere near 3.04. That's the kind of 3.04. I've been mentioning 300 bips as the very strong support, and we're going to see market probably rally towards those levels and then take a turn for the reversal. But because the Fed is caught between rock and hard place, it can't tighten, it can't loosen. So it has to. If it doesn't tighten, complete loss of credibility. So it's in such a precarious situation. But when it comes to the equity markets in the world, now I've been saying that only the Nasdaq hasn't broken down. Every other index has broken down. So that's the reason why I'm saying watch 12,600 on the Nasdaq futures. If it trades below that level on the Chicago pitch session, not the Globex session, the corrective bounce is over, and we're going to see much bigger downsides come through.
All right. Hi, Jay. Good afternoon. Jay, what about the dollar index? What's the view out there? It's cooled down to a sub 102 odd. It went to around 101.5, but it's back around that 102. Where do you see this one headed?
Yeah, the dollar index is either going to break below the 100 mark very briefly and then recover, or it's already bottomed at yesterday's low and rallying. But there's a slight change in the short-term structure. I don't think the record high above 114 is coming, but it could rally very strongly somewhere close to 110 and 111 with or without a break below 100. So the extreme short term, let's say from a 1 to 3 days perspective, it may or may not break 100.8 that it registered recently. But from a few weeks to a month perspective, we're going to see the dollar strengthen somewhere close to 110.
All right, Jay, finally, before we let you go, a quick update on the individual stocks that you have on your list.
Say from a very short-term perspective, I'm slightly negative on L&T Mindtree, LTI Mindtree, and Axis Bank. LTI Mindtree, can be played as a BTST, or BT or STBT, sell today and buy back on Friday. Something like a stop above 48.48 and price objective close to 4,600. And Axis Bank, it's slightly negative. We're going to see a drop. I don't think it'll go above 870. It's likely to drop somewhere close to 830. So both are extreme short-term BTS to play. But a half-hesitant long play on Cholamandalam Finance. It's a record 52-week high breakout. So a stop under 840. 540. And projection possibly close to 600.
All right, Jay, thanks very much. Good getting those trades, 2 sells and 1 buy. These are very near-term trades that we are getting from Jay Bala. Jay, good to have you with us here and speak to you soon again. Have a good and restful weekend coming up. Unless, of course, you're trading global markets, then, of course, go on. Well, real estate stocks are gaining as RBI is pausing on rate hikes, and this will, if it is indeed a pause and extended pause, come as a relief for those who've taken home loans and watched rates go up on them. Sonal is here with details in terms of specific stock impacts as well. Sonal, over to you.
Thank you so much for that. Well, the industry is definitely elated with the fact that the repo rates have been kept unchanged. I spoke to a lot of companies, industry participants as well, and they did go ahead and say that, yes, it was after conversations that they had with RBI that the RBI has gone ahead and taken this bold step. They did speak about how affordability was under challenge. This is the comment coming in from JLL, because EMIs had risen by 15 to 17% from April 2022. Also, home prices were higher by 4 to 12%. So it was a big inflation number that buyers were looking at, and that's why there was a challenge as far as the affordable and mid-housing segment specifically is concerned. So this status quo policy will provide some respite. The industry body CREDAI also spoke about that they had, all the industry bodies in fact had considered and spoken to the RBI and requested them to keep rates unchanged. In the past, RBI increase of rates 6 times that were taken consecutively. It had impacted and dented demand as well. And companies earlier had told us that the under 40 lakh category and the mid-housing segment continue to reel under pressure because of higher rates. Now, there was a data from Jefferies yesterday as well that Q4 for listed developers at least will be a record high number as per the data that they are looking at. Also, strong premium market will be driving this growth, something that DLF told us as well about their newer project. Affordable segment or the mid-housing segment continue to see decline or demand impact due to the rising rates. So this solves that problem for now. Jefferies in its notes also said that 11-year low inventory is supporting the sector fundamentals right now, and as rates peak soon, valuations are likely to be bottoming. So rate cycle was very important in terms of valuations or the stock movement going forward. It's expected to be a relief for the entire real estate sector.
Okay, all right. Thanks a lot for that. By the way, we have Phoenix Mills as well that have come up with their Q4 update. And the quarterly consumption is up by close to around 59%. On a sequential basis, though, it's down by close to around 17% odd. We'll try to get in more details. For the time being, the stock actually had a couple of big upgrades. And it had run up a goodish bit. For the time being, there is some profit taking that's coming in there.
There is mild profit taking, but the sequential decline should not matter as much for Phoenix Mills because that's seasonality. A lot of consumption happens in the third quarter. We have the festive season, the year end, etc. The good part is that on a low base of same time last year, it's jumped 50%, 59%, 60% year on year. So that's a big positive, although the stock, too, has seen a bit of a move in the last few days.
All right, and the other one that's popping up for you on the screen is Ashoka Buildcon, because they have won a big order. I think they've got an LOA for an order worth 2,000 crores odd, if I got that number correct. I think that as well should be up for you. So that stock has moved to the high point of the day as we speak. Devin Chauksi is with us of KR Chauksi. Hi, Devin. Good afternoon. Just an hour or so before we go in for that long weekend. But tell us, what's your view on the real estate space? Sonal just told us, cooling off of interest rates or no further increases, that will be helpful because your EMI is not going to go up then drastically. What's your sense? How do you approach the space, the real estate stocks?
Hi, Nigel. Good afternoon. Well, as we gather, the March-ended results are likely to be better for some of the listed players, particularly those who are operating into the premium segment. Most of the real estate companies are confirming that they've had a good period in the March quarter. So from immediate point of view, I think the results are likely to be better as far as I think the quarterly outcome is concerned on some of the listed real estate companies. Going forward, also the demand scenario remains pretty comfortable as we gather, particularly from the premium segment, where the amount of money is available to be spent, and I think that is where probably some of the large realtors are concentrating at this point of time in executing their projects. So from demand scenario 2, I think the situation looks, comfortable in the current year as it was, in the last year. More importantly, if the rate hike is not taking place, or it may be, for the timing if it is halted, I would think that would be a good breather for most of the companies per se. And that's where probably would like to believe that they would continue to show relatively better uptick on sales as well as the margins continuing for them. So overall, the view remains same. I don't think that major things have changed. But the fact is that if the rate hike is not happening in the near future, probably it will allow them to stabilize more.
Take your point. The big question again, Devin, being whether the rate hike has been paused for now or it will at some point re-emerge. The other part, and this relates with the rate hike and the rate sensitives itself, are all the NBFCs. I mean, during the rate up moves cycle, we saw the NBFCs underperform drastically because they would obviously be disadvantaged as compared to their banking counterparts. But today, the fact that there has been a pause has heaved a sigh of relief across the board. We're seeing big moves on whatever NBFC you look at right now. Do you think they've turned a corner and maybe they warrant a fresh look, even if there is no more than 1 or 2 rate hikes in the near future?
So, Mangalam, for sure, I think most of these NBFCs, the likes of HDFC, LIC Housing Finance, or even Bajaj Housing Finance, the larger players, they are largely, having a better time as we see it, as far as the offtake of credit is concerned. Even in the last year too, most of these NBFCs which I mentioned, they've been able to generate a growth of around 20% or so in the AUM. So from that point of view, the demand scenario is becoming absolutely clear. And I believe that this is likely to continue even in the current year. However, the margin point which you raised, I believe that most of them have got the ability to raise money at a competitive cost, I would say. And as a result of which, at least I think that these names which I have mentioned, which we track closely, I believe they have the ability to raise money at a competitive price. So for them, the NIM is protected. So on one side, 20% kind of the average growth continuing into the AUM. On the other side, NIM is protected. I would believe that I think in a nervous or negative market sentiment that we have, some of these companies are available at a corrected valuation. So that could possibly suggest a case for investing into the portfolio at lower levels. We believe the housing demand continues, and I think the credit offtake on housing will continue going forward as well.
Okay, Devin, stay with us. The market's up, 50 points, 17,600 plus once again. We are back with Devin. More stock discussion on the other side.
Welcome back. Well, just take a look at a few stocks in the broader marks, actually, which are taking your breath away. First Source, the stock is back to the high point of the day. NBCC again has moved higher as we speak, so that one's having a rather good session. And Voltas, we've had some disappointments in the past because margins have got compressed. You also saw them lose some market share, but Voltas is making a bit of a comeback as we speak. And I think earlier today as well, Nimesh had told us about a couple of upgrades coming in on pharma names. Oro Pharma seems to be reacting to that. That stock moves higher as we speak. But another one that's doing well is IEX, and the stock has halved from the peak that we saw a couple of years ago. But today that stock is up and about. Vivek joins us to fill us in with what's got the stock excited. Vivek?
Well, that's right. When you're talking about IEX, there have been multiple worries on the stock. Number one, competitive intensity increasing with the other exchanges coming in, and also the overhang of the fact that there could have been a reduction as far as the transaction fee is concerned when it comes to actually trading on the platform. However, what's actually happened is that yesterday the CERC, the Central Electricity Regulatory, has actually gone ahead and issued the transaction fee charges for power exchanges, and it has maintained the status quo at 2 paise per kilowatt on either side of the transaction that is going to be levied. And the reason that CERC has stated for keeping it as a status quo is that they're saying that any change in the transaction fee or differential pricing is something that can go ahead and hurt competition. On the back of that, UBS has actually gone ahead and written, they're saying that this particular approval is in line with expectation that the status quo will actually remain as far as transaction fees are concerned. UBS states that this particular development is a key positive as far as IEX is concerned, as a near-term risk from change in the transaction fees has been eliminated. Just for some context, in July 2022, IEX had gone ahead and petitioned the CERC for, maintaining a status quo as far as transaction fee is concerned, and they wanted the 2 paise per kilowatt hour, this particular fee, to remain as is.
Vivek, that 2 paise is the sort of primary way through which IEX makes money?
Well, it is.
Yeah, sorry.
Absolutely. It is one of the primary ways, and in fact, the brokerage and the commission that IEX earns, this is one of the ways. The other thing, of course, is that it's actually a volume-based play, given the fact that the company has multiple products for both the seller and the buyer to come, and it actually has a price discovery process on the platform itself. So this has actually gone ahead and hurt the company's volumes in a sense as well. Other than that, there have been other issues in terms of competing exchanges that have come in and which have been quite aggressive in terms of actual pricing for various other products as well. So that has also aided to the underperformance of IEX in the last year.
All right, Vivek, thanks a lot for that, explaining us the business of IEX and telling us why it is up almost 10.5% as we speak. A big mover today, in fact, the top gainer in the F&O space itself. But the other stock which is lower is Dabur, and that's down 4%, virtually at the low point of trade, and that's on account of their fourth quarter update. Now, we've gotten updates from comparable companies like Marico, Godrej Consumer and Dabur. Why is it that Dabur is lower by 4% as against, say, Marico or Godrej Consumer, despite having a mid-single digit revenue growth that the company has reported? Two big differences. The first one is that in Dabur's case, the operating margin is expected to be lower by 200 to 250 basis points. While large part of that is on account of cross-currency headwinds, the company gets over 30% of their revenues from outside of India. A large market for them is both Turkey as well as Egypt, where currency devaluation will impact them. But operating margins being lower by 200 to 250 basis points at a time when all the other companies are reporting margin expansion is something that the street doesn't like. The second part is that home and personal care business for Dabur will report a low single-digit revenue growth on account of the slowdown in personal care. Now, this is at a complete diametrically opposite view of what Godrej Consumer has reported. They've reported double-digit growth in both their home and personal care businesses. At the same time, HUL is also likely to report some sort of growth, is what the street is expecting in their personal care business, largely because of the price cuts that they've taken, and volume growth would come by. So out here, low single-digit revenue is something which is at an opposite end of what the other players in the industry are reporting or expected to report. So apart from that, we have no problems. India business seeing some sort of recovery, but not fully recovered yet. That's something that everyone else has been saying. F&B business for them continues to do well, double-digit growth out there, and healthcare portfolio expected to be in positive territory despite a high base. So a couple of good parts, but a lot of bad parts, as a result of which the stock down 4%.
Okay, well, there is Dabur for you. It's a full 4% cut, as Mangalam pointed out. Devin, any thoughts here? Dabur and any impact on any of the other companies as we start to see more numbers come through?
Yep. Prashant, I believe that I think we cannot possibly equate all the companies on the same scale as far as FMCG business is concerned. Many of the companies which are in the food segment have been showing relatively better performance, largely because of the comparatively lower cost on the input side. And I think overall in the economy, the consumption levels have actually remained steady to higher, at least in select pockets. So from that perspective, I think one will have to see how exactly other companies report. But my reading says that given the kind of softness in the prices, I would think that the margins would be slightly better off or protected from going down under. And at the same time, I think the volume-wise in select categories in FMCG, the business condition has remained relatively more stable than otherwise.
All right, and Devin, Vivek spoke about IEX. Do you have any thoughts there? It's a 10% up move that we're seeing on the stock right now.
So luckily, I think the volumes have started picking up. I think if you look at the company on a month-over-month basis, 12% kind of a higher sale of units have taken place. And given the kind of a steady state of margins that they would have on the transactions, I would think that with the higher volume, the comparatively, I think the performance should be better. If you see last 4 to 6 quarters, I think the performance of the company has remained by and large muted, both on the revenue front and in fact, I think on the profit front, I think the performance has been down from what it used to be 4-6 quarters back. Now, with this particular volume uptick taking place, there is all the promise that I think if it sustains, then possibility of one would get relatively better performance on the revenue front as well as on the profit front going forward. That could be one of the reasons for which the stock price has possibly started recovering from where it was.
Okay, Devin, we'll leave it there. Thanks very much. Have a good extended long weekend. Appreciate your time here and see you back next week again. Thank you. Jitendra Gohil is head of India Equity Research at Credit Suisse Wealth Management, and he's now joining us to take some questions and analyze markets with us. Jitendra, good to have you with us here. What are broadly the implications of this pause by the RBI, and is it going to be long-lasting in terms of giving a push to markets from here? Because from the lows in just 5 sessions, the Nifty has already done about 600 points or so. Does it add more, in a way, fuel to the fire? The good fire.
Hi, Prashant. Hi, good afternoon. Yes, we have been expecting RBI to pause. It was a little, probably a contra call, but our expectation is that 6% of inflation in India is actually desirable. And we have seen that rural slowdown is happening. We have seen that the lower end of the consumption is struggling, whether it's lower cost housing companies or lower cost housing market. So we think that it's a prudent move. Market was expecting 25 bips rate hike. So we think that there could be some positive sentiment to this. But on the other hand, Indian economy is also doing pretty good. Look at last 2 years, we have revised our GDP projection numbers upwards, and on that higher base, India is going to grow at 7%. So inflation is under control, and the growth is not that bad. So I feel that yes, market will take it very positively this move.
All right, hi Jitendra, Nigel on this side. Good to speak to you, Jitendra. You're saying that at around 17.5 times, the Nifty is trading more or less in line with what the averages are. But you're not ruling out further corrections from here on. And then you're factoring in a good recovery in the second half of the year. So 2-part question. One is, What do you think in terms of a downside? How deep can we go? We were at around 16,800 not too long ago. Do you see us go lower than that? I mean, how could it be a 10% correction from here? And that factored about the second half of the year being good. How good can it be? Where do you see the Nifty headed? All-time highs?
Yeah. So it's very difficult to say the number-wise, but we feel that definitely we have to look at the global backdrop. We cannot isolate India for what is happening globally. So we feel definitely in the next few months or so, we might see more pain looking at the way Fed is going to keep interest rate higher. Our house view is that Fed is not going to cut in the second half, but will keep interest rate higher for longer. And that might see some kind of consolidation in the global market or correction in the global market. And obviously, India will also see some rub-off impact of that correction. However, from a medium-term perspective, we think that market is clearly underestimating or underappreciating India's resilience and the growth, right? So as I mentioned earlier as well, 7% growth in FY23, despite the war broke out. We have seen steepest rate hikes. We have seen real estate defaults in China, but still India clocking 7% growth. It is commendable. And the next year also, we are going to grow somewhere around 6.5%. Inflation is going to fall below 6%. So we think that there would be a good recovery possibility once the interest rates globally starts to peak. And in fact, our view is that if global growth slows down, we don't expect developed markets to go into a significant recession or a marked slowdown. We think that there could be a minor slowdown in the global markets as the authorities are reacting to this, defaults by the bank, or even probably we might see more trouble. But the authorities are very agile and they are taking steps to contain the contagion impact. So we think that second half, once the interest rate starts to peak out and market starts to build in kind of a rate cuts, we might see more upside to India. And I won't be surprised if we start trading again back to 19 times when we see interest rate starts to fall in the next 6 to 9 months or so. So we remain a little bit constructive in the medium term. In the near term, yes, we are a little concerned about what is happening in the global financial markets.
Right. Take your point on where the frontline index would be, and the fact that you are more bullish on India than the world right now, which is also visible in the kind of exposure that you have with regards to the positive list. You have FMCG, you have automotive, you have multiplexes, you have basically all the sectors which are India facing as against global facing. But my question is very specific towards the pharmaceutical space, because I remember a few months ago you had said that you are increasingly overweight on pharma, like the fact that the corrections have made valuations attractive. Thereafter, for a few months since, we saw continued underperformance, but now it's coming back in favor from a lot of these large contra investors. They are finding favor in pharma. What are your thoughts here?
Simangalam, it's always that when the global growth slows down, definitely market would like to hide in defensives, and pharma, FMCG and IT are the sectors that we like. We think that IT will have more trouble. So we already overweight on FMCG, and we think that some of the pharma names which are less exposed to the global theme, but domestic pharma names could be looked at, whether it's in the healthcare space. We like hospital related stocks. We like some of the chemicals companies which actually produce chemicals for the pharma sector. So the API manufacturers, some of the companies that are into chemical industries, those are the sectors that we prefer in the pharma sector, because we think that if the global growth slows down, there will be good buying interest coming in these kind of names.
All right. Jitendra, I also wanted to ask you, you've given a few of these picks that you like, sectors that you like: autos, banks, real estate. Let's speak about the real estate space. This RBI cut that you all were anticipating, but the street was, going in with around 25 basis points. You all were going in with the pause. Do you think real estate stocks would look up from here? And how do you play this theme? Do you play the real estate stocks? Do you play the financing stocks? Because, they as well get an additional fillip now, since the cost of borrowing will not go up. Or you'll play the ancillaries, tiles, ceramics, pipes, all of that.
Yeah, Nigel. See, we have been very positive about the urbanization theme. We have written on urbanization, for the past few years, and we have been pretty positive that the per capita income of India is going to rise from here onward as the urbanization rate accelerates, and we continue to maintain that view. Now, why real estate? We were of the opinion that RBI is going to pause. Our expectation was even if Fed raises rates by 25 basis point, it is prudent for RBI to pause because inflation trajectory is going to fall after, let's say, March, because last year the war broke out in the month of March. So on a YOY basis, we have a higher base, and it remains to be seen the kind of impact that 250 basis point hike by RBI yet to get completely felt into the system. So we do believe that on the demand side, there is enough demand. Inventory levels are lower. We are coming out of a very, very downward trajectory in the real estate sector for past several years. And now the per capita income is going to go higher. That was our view. So structurally, we became very positive on the real estate stocks per se. However, real estate industry, if you look at the developers, it's little bit higher beta kind of names. We have also seen job cuts, job losses, and hence we can't go outright bullish on the developers side, right? Because the pricing growth is little tough to come by when you have several job growths. So definitely real estate, we will play stocks which have very, very strong balance sheets, stocks that do not have higher leverage, and also they have some other commercial assets, right? So whether it's malls or whether it's commercial buildings. So we feel that a mix of these assets would be preferred over a pure play developer which is niche and very focused in particular market. Number one. Number two, we think that some of the tile companies are better positioned because the gas prices have started coming off. However, we are not very bullish on the paint companies given valuations, and the supply side is going to see tremendous growth over the next few years, which will be easily absorb the kind of rising demand. So we are negative on the paint companies, at least for the next few quarters or so. So tile, yes, we like real estate developers. Coming to the financing space, I think it's pretty crowded, and hence we think that you have to be a little cautious here. The margins in the housing segment is not that great. So we remain a little bit, on the sidelines in terms of housing finance companies to play with it. But definitely real estate developers which have strong balance sheets, very diversified portfolios, and tile kind of companies that we like. We also like some pipe companies that we have in our portfolio as well.
All right, Jitendra, we'll leave it there. Thanks very much for your time. Good speaking with you, as always, here on CNBC TV 18. There's a flash at the bottom of the screen which says that the Air Force has signed a contract with Bharat Electronics for indigenous electronic warfare systems. No indication of the size, etc. This is coming in from the Newswire. ANI, they're seeing as a bit of a move, 0.5% or so.
Seems like there are a bunch of news pieces which have come with regards to defense, because just moments ago before this we had a Paras Defense approval which has come in for one of their products as well.
Drones.
So drones, that's what they keep talking about as the big opportunity for them, and that stock too has surged to the high point of trade. So maybe it must be one agency, one evening, making all the approvals at the same time.
And I think yesterday we had Bharat Dynamics that came out with their numbers.
Yep.
They disappointed. The stock was under some pressure because there was a degrowth. Right. They said there were supply constraints out there. So that one has corrected a little bit from the top. And even today it opened up well in the green, but some bit of selling out there. So we'll have to keep an eye out on the story because the orders are coming through. Now over to execution.
Yes, execution at the right price, the right time, and the right profitability and margins. With that, we take a short break, come back on the other side. We'll, as always, get to what dealing rooms are saying in our special segment, D Street Chatter. Welcome back. A bunch of stocks which are doing well this afternoon. NBCC has suddenly sprung up, moved to the high point of trade, has seen a big move in recent times. Let's see whether that continues or not. Godrej Properties, the real estate pack, continues to do well, so that one's at the high point of trade. And Samvardhana from the Motherson Group actually too has seen a wee bit of a spike, has moved to the high point of trade. So good time to get in our special segment, D Street Chatter, where Nimesh gets us an insight into the dealing room chatter. Nimesh, what exactly has happened today?
I'm Mangalam. Yesterday a small section of the market was expecting a pause, and that's delivered by RBI. So that's a bit of a positive surprise, and that had a big move in the rate-sensitive sector. So real estate, NBFCs, all are buzzing in trade on the back of that surprise positive which came in from the RBI. In terms of the flows, again, it's a mixed of trade, but I believe there's going to be a small market at close basket selling at a leading FID. So maybe last 30 minutes you'll see some bit of volatility in the broader markets as well. But the big story is the return of mid-cap and small-cap. Since April 1st, that's the space which has relatively outperformed and on good volumes as well. So it looks like the retail interest is back, and that's helping a bit of sentiment as well in the mid-cap and small-cap. Big moves and on good volumes as well in the broader markets. I guess the big busy season will start for us next week when the earnings season kicks in. So IT will be the first to report, and there are some mixed feedback as well as far as the IT numbers are concerned. So yesterday, if you remember, I had highlighted about HCL Tech being put out as a negative catalyst watch by JP Morgan. So it's going to be mixed as far as IT is concerned. But the good part is that there is a bit of return of mid-cap and small-cap outperformance, and that's positive as far as sentiment is concerned for retail investors.
All right, Nimesh, got that. But what about individual stocks? Give us the juicy details.
Well, Nigel, in terms of individual names, the first stock on my list today is Aditya Birla Fashion. That stock is moving higher after a clean-out trade from a domestic mutual fund. There was a large block, some 35 lakh shares, and I believe some large HNIs has bought. So maybe disclosure will come, so that will be interesting. But the stock has actually corrected a lot from the highs, and now you're seeing a bit of up move in that stock. So that's the first one. The second stock is Aptech. Again, as I said, the whole mid-cap and the small-cap universe has seen some bit of a pullback, and Aptech stands out in that space. Big move in that stock and on good volumes as well. And I believe some HN action is back in that particular stock. So hence, that's the reason why you've seen a big move in that stock. So that's the second one. The third stock is Bharti Airtel. Again, been consolidating for a very long period now, but now there are first signs of some bit of buying interest back from larger institutions. So the delivery volumes are expected to be quite high in Bharti Airtel today, and some bit of buying traction is back. So that's the reason why it's part of my list. And the last stock is PB Fintech. In a day when there is a lot of momentum on the upside, PB Fintech is under pressure, and largely because there are some block offers being offered by some large institutions. It's at limit orders, but I believe that's the reason why that stock is under pressure. So maybe we'll see some large volumes on the sell side in PB Fintech, and hence that stock is under pressure today.
All right, Nimesh, thanks a lot for that. Nigel, you like the juicy details. But let's talk about some individual stocks then. Speaking about details, these details come in from the fourth quarter updates of both Avenue Supermarts as well as Nykaa. Both these stocks under pressure. Let's start with Nykaa. Nykaa, what's happened is that the business of theirs, which has done well in the fourth quarter as compared to the third quarter, was the business which did not do as well in the third quarter. For instance, the beauty and personal care business, the company said, did better in the fourth quarter than the third quarter. Third quarter, it grew 26%, which was lower than the 30% plus growth that the company's segment has been posting in the recent past. Apart from that, what's not doing well is that consumer pullback in discretionary spends has had some impact on their fashion business. This was supposed to be the growth and gross margin driver for the company. So fashion business in the fourth quarter has grown in late teens. That compares to the 50% growth that we saw in the third quarter itself. Apart from all of these things, there are multiple senior exits which are taking place in Nykaa. The stock did well in yesterday's trading session, and clubbed that with the launch of a big competitor, Tira, from the house of Reliance, is actually pressurizing the stock. As far as DMart is concerned, now 20% standalone revenue growth, one would say, is a good enough number. But remember, over the last 3 years, the revenue CAGR has been around 18.6%. And the rate at which they've added stores has been over 20%. So the incremental stores aren't adding more in terms of revenue as well as margins of the company. So we'll watch out for how that pans out. Of course, quarter on quarter, there has been a decline of 8.5% sequentially. This quarter, they've added 18 stores. Total stands at 324. In fact, this financial year, they've added 40 more stores. The street would like them to add more stores. At the same time, add stores which add to their revenue a lot more further, and as a result of which we'll perhaps look at Avenue Supermarts once again with the same halo that we did earlier. The valuations of Avenue Supermarts also notwithstanding, I mean, they've corrected a fair bit, and a lot of the brokerages which earlier believed in the story are now revising their stance, and at least the multiples.
Oh, absolutely. So that's Nykaa and DMart, Avenue Supermarts for you. Amrish Baliga is with us for a quick chat on markets. We're about 13 minutes away from the market close. Amrish, good to have you with us here. Let me just dive straight into what you like. And what you like is Grindwell Norton. That's your pick that you get to us, the one pick that you get to us every week. Tell us about the name and why you like it.
Grindwell Norton is a market leader in abrasives with about 26% market share, and they also are there into performance ceramics and plastics. IT services is about 10% of the revenue, and their recent acquisition, PRS Permacell, will also broaden their product portfolio. And if you look at the Q3 earnings, they were quite decent. Revenues were up about 20%, EBITDA rose about 32%. If you look at the cash flows for the last 10 years, very strong cash flows with high margins of 16% plus. And now they are focusing on ceramics and plastics, which again would be the new value-added products going ahead. And looking at the next 3 years, my expectation is that the revenue CAGR will be about 21% and EBITDA CAGR will be about 24%. Net debt-free company with double-digit return ratios. So expecting an EPS of about 48 for FY25. So my target is about 2,400, which is a decent about 20-25% to move from here.
And where does it trade now? I'm just looking at the chart, Amrish. Usually, you like stocks where charts are like this. They're going down, and then you like to pick value. Here we are pretty close to not very far away from all-time highs. Although the stocks now come back to the same levels. It's not done very much for the last 2 years now, right?
Exactly. From that point of view, since it has not done too well, though the performance has been, up to the mark, better than expectation. So because of which I expect the stock to perform, from here on. Normally I look at contra bets, but again, this is not exactly contra, but then it has not really performed despite the financial performance.
All right. Hi, Amrish. Good afternoon. Just a few minutes before we go into the weekend. But Amrish, a couple of days ago, we got the North America truck orders, and they didn't look very great. And for Bharat Forge, that's one of the points, that have some impact on the stock. I think you were fairly bullish on Bharat Forge. You continue to hold on to that stance because the remainder of their segments are firing?
Absolutely. And if you look at the history, the last, say, 10 years, whenever, the order flows have reduced for the Class 8 trucks, Bharat Forge has corrected. And always that has been the buying opportunity. Because, this news keeps on changing. In the next 3 months, you'll see that the order flows are better. You'll see the stock again shooting up. So, I would see this as a buying opportunity. And anyway, it's a 2 to 3 year buy for me. So, I'll continue to hold.
All right, Amrish, what we'll do is we'll continue our conversation with you after this very short break. And as we do that, here's a quick programming note. Our weekend special editors roundtable coming up today at 4:30 p.m. We'll get you a sneak preview of what are the themes that we'll discuss on the show today.
We'll put the spotlight on our own markets. Why are so many foreign brokerages giving buy calls on India? And what makes the Indian equities a compelling buy now? Sonia will get us a detailed analysis.
Okay, F523 was a tough year for investors in the broader market. Will F524 be different given a pause by the RBI and about 250 basis points of hikes since May of 2022? Nimish will get us an explainer on that.
We'll also talk about small caps. They'll be in focus as the index has been at the same level since Jan 2000, same level as Jan 2018. Are small caps set to make a comeback from here? We'll get you an analysis.
Well, and we'll also be joined by Sunil Singhania of Abacus Asset Management to discuss the markets at large. So don't forget to tune in to CNBC TV 18 at 4:30 p.m. today.
Welcome back. So we've got 7 minutes to go for market closing, and things are kind of in cruise mode now, just about 50 points higher, and we'll end around the 17,600 mark. Of course, if nothing big happens in the next closing few minutes of trade. Amrish is still with us. He was telling us why he likes Grindwell Norton. He explained that to us. Amrish, so on the back of what has happened today with the RBI, or rather what has not happened, which is a hike, will markets get some more runway higher, you think, or this is going to fizzle out soon? What's your sense?
No, because the expectation was 25 basis points, and that's not happened. So I think that's clearly positive, and the market has also reacted in a similar fashion. I believe that the markets have at least shown an intermediate bottom. I was quite cautious in the last couple of months. I'd said that we were nearly 35% in cash. Last week, we were about 10% in cash. And now we have got fully invested because I feel that the intermediate bottom has been formed at closer to 16,800, 16,900. And I think we are clearly on the way up. And I'll not be surprised if in the month of April itself, we are able to see levels of about 18,200 to 18,500. So, and at the same time, I think since the analysts have tapered down the expectations going ahead, there could be some positive surprises. And overall, over the next couple of months, clearly I see the Indian economy outperforming the global economy, and because of which clearly we'll have funds coming back sooner than later. So whatever said and done, I think the downside is over. We may not have a sharp up move, I think beyond 18,500 immediately. But then if you're talking of the next 1 year, I don't think anyone can lose if you're investing today.
Right. Amrish, one underperformer today is Varun Beverages, a big mover in the last 12 months or so. In fact, over the last few years, the story of them being the trusted partners for Pepsi in India, getting more territories, etc., being discovered. Now, just before the summer season's quarter results, just before, things start to look good for them, seasonally speaking, the stock has seen a bit of a dip, still close to its highs. But do you think it's the valuations which are coming in the way?
Valuations is surely coming in the way, and I suppose the big disruptor in this space would be Reliance with their new launch in this space, and because of which, clearly Pepsi and Coke have cut prices, and that's going to hurt margins. And talking of Reliance Retail, I think that will be a complete disruptor in the FMCG space. We have seen that to a certain extent affecting Nykaa. It would affect DMart, and I suppose it will also affect a number of branded players. Right from HCL to ITC to Dabur to, the whole lot. If you're talking of the next 4 to 5 years, because they would be the one who will actually be controlling the complete distribution space, the complete chain would be controlled by Reliance in the next 4 to 5 years. And clearly their brands will find space on the shelves as compared to the competing brands. So, whatever was the advantage for most of these brands in the last 4 or 5 decades would possibly be lost to a certain extent to Reliance in the next 4 or 5 years. So, I think that's one space to be watched out for.
All right, Amrish, final question before we let you go. Two stocks, IGL and MGL. At the start of this week, there was hope that maybe, in fact, over the past weekend, the Kirat Parikh recommendations would be accepted and their cost of gas would come down. It wasn't taken up, at least over the last weekend. The stocks got hit back. But now the hope is that in the coming weekend, it will be taken up and, they get that benefit. Just by the way, the stocks that were down close to 10%, MGL and IGL on Monday itself, they're going home with gains for the week. So they've recovered all of those losses. Your view on them?
Right. In fact, after this recovery, I'll not really buy. I'll possibly wait for the next bad news to get into these stocks. Because these are great trading plays. And whenever there's an adverse news, you should actually pick it up for the next good news or the hope of the next good news. I think that play is already over this time.
All right. Wait for dips, wait for bad news, which will get you the next dip. Thanks very much, Ambrish. Appreciate you joining in and running us through those trades and those calls. And of course, always interesting speaking with you. We're up 40 for the sort of day, which is not very much, of course. But for the week, I think it's up, the index is up 1.4%. That's 240 points on the Nifty. And I think for the Bank Nifty as well, we are flat for the day, actually. A fair bit of sell-off from the high point of the day. The high was 41,274, and we'll close around 41,007 or so. So that's the Nifty Bank for you. For the week, though, we are up 1% for the Nifty Bank. That's about 422 odd points or so. The mid-cap and small-cap indices, a much better showing today, 0.6% today. And for the week, 1%. And I think the Nifty small-cap index would be something similar, 0.8% higher today. And for the week, the small-cap index actually is up about 2 1/3%. That's a winner. The small-cap index is the winner Friday to Friday. Of course, with 2 holidays thrown in. So it's been a shortened week. Guys.
It has been a shortened week, but definitely a shot in the arm for all the small and mid-cap stocks. Today belongs definitely to the mid-caps, alongside the rate sensitives that, did well because of the RBI's pause. So we had all the real estate and NBFC stocks do extremely well. So good gains coming in for something like a Godrej Properties, DLF, Oberoi Realty, all of them. ending closer to the highest point of today's trading session. Alongside that, we got good news coming in from IEX as well in terms of their quarterly performance. So that stock did well. NBFC is doing extremely well as well, with Chola Investments, M&M Financials, as well as Canfin Homes, all the other, rate sensitives doing extremely well. So that's the story of the day on the way up. On the way down, few losers. We had Dabur, which was lower on account of their quarterly update, Oil India, Page Industries, as well as Bata. But by and large, it was a positive day for the mid-caps.
It seems that the Indian market said, right, nothing can stop me. I'm on the way. I'm on the way. On the way up. I think that was what played out, in fact, for the bulls today. A good session, and you're feeling like, in fact, the broader markets are doing far better as well, because otherwise only the headline index was moving up without much traction being seen in the broader markets. But clearly, for this week as well, the mid-cap index, the small-cap indices, they do better than the Nifty. That's what makes portfolios feel good. Gentlemen, we're almost done. Off for the longer weekend, but we have editors roundtable before that.
At 4:30. By the way, I just discovered that next week, although it's a full week, but I think next Friday, is off, and there is a Monday after that.
No, Monday is working.
No, the Monday after.
After that.
Yeah. The Monday after. It's the first of, not the first.
Prashant,
you've done the calculation.
With regards, I'll tell you how it goes. Tomorrow is a holiday.
Yeah.
Then the next weekend as well, we have a truncated week because Friday, Saturday, Sunday is off.
Yeah.
Then unfortunately, we have to work for 5 whole days. But then the following month, you get that May 1st. So, got it perfectly sorted out and planned.
But up until then, you all have the editors roundtable to wait for. And at 5, they can tune into the CNBC Next Gen handle on Instagram, where we have launched a new product for the Next Gen, the Gen Z viewers, which is basically the fun content, the Gen Z content, but with the credibility of CNBC. So watch Editors Roundtable, watch CNBC Next Gen, watch CNBC, all products all through the weekend. Have a good long weekend. With that, we wrap up on this edition of Closing Bell. Don't go anywhere. Our Thursday special Big Deal comes up next.